Okay. Welcome everyone. If you're just joining in, just trying to wait for few people to join before we kick off. But thank you for taking our time to attend this webinar hosted by Intense Digital, and we'll kick off in a bit. All right. So welcome again, everyone, to our webinar titled ROI Driven Customer Acquisition Strategies for Online Lending Companies. Please let me know that you can hear me loud and clear. You can drop messages in the comment section if you can't hear me or see my presentation, and we'll try and sort that out. So, on the call today, I have a special guest, Grace Effiom. Grace is a seasoned technology executive with experience in solving problems that enables lenders to lend at scale. She works for a company called LendSquare. I hope I pronounced that right. And LendSquare basically helps digital lending companies with their software and their infrastructure, so that it's basically plug and play. You don't have to build your own software, to run a digital lending company with LendSquare. So Grace will be joining me on the call today to talk about, this topic of ROI for user acquisition for digital lending companies. Grace has expertise in product development, customer experience, and operations management, and she's led several initiatives that have significantly improved organizational efficiency and client satisfaction. Yeah, so I think it would be good for Grace to say hi.
Hi, Leye. Thank you for the introduction. So it's actually LendSquare, but
LendSquare.
just went with the SQR. Oftentimes people will be like, "Oh, it's LendSQR." We're like, "No, it's just LendSquare," but we went with the SQR instead of actually spelling E square. Yes, thank you so much, and I'm so glad to be here with your team. And I'm just going to give like a brief background about myself, and then we can take the conversation from there. So my name is Grace Effiom. I'm the head of enterprise here at LendSquare. I have my background in marketing and communication. That's pretty much where I started off. Studied mass comm, was so sure I was going to be a PRO. Always wanted to be public relations officer, and did a bit of marketing because that was part of our course criteria. Eventually, along the line, I found myself in tech, and it was the least surprising scenario that I ever expected. And I loved it. I really did enjoy technology, and that was how it started. So I've been in LendSquare from like day one, from the first day of what do we want to call the company? Are we going to use this name or that name? Just from the first day. And it's been a whole lot of roller coaster. I've been involved in the entire stage. So you can call me an aspiring CEO. Call me founder if you want. But yeah, yeah, that's it. So right now, I'm just the head of enterprise and I'm supervising the largest team in LendSquare. But that's a brief background from my end. Thank you so much. I'm so glad to be here.
Hello, founder, and it's good to know, all of that about you and the fact that, you've been in the team since day one. When people see head of enterprise, they just think, oh yeah, they hired her to come and bring in money. But, it's good to know that you were one of the founding members, and we're looking forward to hear everything that you tell our audience today about customer acquisition. So moving right into it, about myself, I'm the CEO and founder of Intense Group. Intense Group is a group of companies in the marketing, technology, and media landscape. But today's webinar is hosted by Intense Digital, which is a growth marketing agency that focuses largely on helping businesses in the finance sector with customer acquisition, retention, activation, and loyalty. And this webinar is one of the ways that we share our knowledge to help potential customers, or even just businesses that need help in scaling their customer acquisition activities. I wouldn't say too much, but Intense Digital has been around for a while as well. We're almost 10 years helping businesses across several industries, but especially finance, with customer acquisition through digital channels and strategies. All right, so I'm going to go right into it and then remove my face from the screen. Actually, let me leave my face there. So let's go right into it. What is customer acquisition? I feel like that's pretty straightforward. It's basically like buying customers, right? But if you wanted to look into the mathematics of it, it's basically how much you spend on your sales and marketing divided by the total number of new customers you have. So basically, if you spend 10,000 or 1,000 naira on marketing and you're only able to acquire 100 customers, it means that it costs you 10 naira per customer. Your cost of customer acquisition is 10 naira per customer. And we're starting with this because obviously the topic for this webinar is ROI, which is return on investment. So it's a very money focused topic, and what we do at Intense is ensure that not only do you acquire customers, but that it makes sense for the business, because there's no point acquiring a customer for 10,000 naira and you're only able to make 2,000 naira off, that customer. So customer acquisition, great, but customer acquisition with return on investment, or at least return on ad spend, even better. So what is a good customer acquisition cost? A good customer acquisition cost is, ideally, it should be as low as possible to ensure that your customer acquisition strategies are profitable. So if it's just like cost price, selling price. If I acquire a customer, for, like I said, with 10,000 naira, I'm expecting that maybe I can make 40,000 naira off that customer. So by the time I remove my marketing cost and some of my other operational expenses, maybe I'll have 15,000 naira left. So a good customer acquisition cost is a cost that allows the company to make profit on the transaction, on the cost that they have expended. um, and I guess that's where things like customer lifetime value also come into play. For businesses like digital lending companies, online lending companies, it's expected that when you acquire a customer, that, it's not going to be a one-time transaction, because you want that, the first transaction is probably not likely to help you break even. So by the time that customer borrows from you one, two, three, four, five times, it will be much easier to have broken even and made money off your customer acquisition costs. There are different types of customer acquisition. You have inbound marketing, which is basically, promoting content across channels like search engines, social media, um, and even email. Certain times is connected to content marketing. You have outbound marketing, which is basically direct selling, like cold emailing and direct mail. And you have referral marketing, which a lot of fintechs use nowadays, where it's basically like word of mouth, where you reward your customers for recommending your product to their friends, their family, or their associates. So in that way, what people try to do is ensure that the reward that they are giving to their customers for, these referrals is much less than how much they'll spend doing something like paid ads, for example. And the third type of customer acquisition is obviously the most popular, which is paid advertising, where a lot of companies try to go in there and spend money, but then they run back out because they find that sometimes it's usually too expensive and it's hard to scale. And that's one of the reasons why we set up this whole webinar, to help you figure out, how do you make this make sense, how do you make it cost efficient. Now, there's a big difference between customer acquisition and lead generation. Lead generation is just one step out of the customer acquisition funnel. So, for example, if somebody goes to your app, for example, and registers, it doesn't mean that the person is a customer just yet. The person still needs to, fill a form, do the KYC, get onboarded, and then take the loan. It's until the person actually becomes a paying customer, that it becomes customer acquisition. A lead is basically when a business secures contact information and some other relevant information that will help you qualify that person as whether they're a good potential customer, or maybe they're not really a good fit for your business. Right. So how do we create customer acquisition, or how do we create a customer acquisition plan? The very first thing is to actually identify your customer avatar. The customer avatar is basically just like when so a crime happens, and they said, oh, we're describing the person. It's a short, black, female, 5'9", curly hair, was wearing a hat. That's sort of like a customer avatar, basically just describing what does my ideal customer look like. Because if you don't understand what your ideal customer looks like, then it's very difficult for you to even speak to them, target them, address the challenges that they have, which will make them listen to you. And if you don't identify your customer avatar, it also means that you'll be speaking to a lot of other people that have no business, contacting you or clicking on your ads, hence wasting your ad budget. So once you're done identifying your customer avatar with things like demographics, psychographics, um, customer insights, and things like that, you need to determine what your goals are. Obviously, for customer acquisition is mostly conversion. Although for lending companies, you usually want them to make a phone call or fill a form, that will then be passed to your sales team, for them to, or your onboarding team, for them to contact that person, get them to finish filling their KYC, and basically close that out. And then, you want to choose a platform or an avenue to do your customer acquisition. Like I'd already sort of touched on, the most popular are content marketing, social media marketing, and paid advertising. After that, you want to set a budget. But I believe that, if you don't really understand customer acquisition, it's hard to set a budget. But a good way to know this is to, understand what your customer lifetime value is. And to put it simply, customer lifetime value is basically the value that a customer will spend, throughout their time with your business. So it's like, if I own a lending company, how many times would a lender typically borrow from me, and how much would I make from that lender? So if you've been in business for a while, you probably wanted to go into your data, to see how long a typical lender will stay with the business, before they become inactive or dormant, and how much they will spend. Whatever that average is your customer lifetime value. So let's assume that, what you make from that customer is 100K. So it means that your customer acquisition cost has to be, way lower than 100K, so that you can, obviously make your money back plus, plus tax. What does acquisition mean to you as a lender? So for online lenders, acquiring customers means more than just attracting new clients. It involves a comprehensive strategy to acquire new customers, ensure repayments, and keep those customers retained. So fun fact, is I mean, I think everyone should know, but it's cheaper and easier to retain a customer than it is to acquire a customer. So customer acquisition is just the first step into ensuring that your online lending company is able to, see a healthy return on your investment. As you all know, there's no success without challenges, and lending companies face quite a number of challenges. Okay, hold on a second. All right, everything's good. Right. So, lending companies face quite a number of challenges, which include obviously competition. I think as at the time of putting together this research, we found that there are over 120 approved digital lenders in Nigeria alone, and there's a whole lot more that are not approved or registered, or they are waiting for, for approval, maybe by the CBN or something like that. There's also a high churn rate because not everybody likes to borrow, to be honest. I don't. And I don't like people calling me, asking me for their money. So, when you acquire a customer, there's a high likelihood that after they borrow that money and they've paid it back, they disappear, meaning that you still need to go back to the market and look for more borrowers, more and more borrowers. So it's very challenging maintaining, customer satisfaction and ensuring ongoing loan repayments. And then, of course, the elephant in the room is higher customer acquisition costs. Um, Customer acquisition costs, increase significantly, impacting the profitability of acquisition efforts. Rising marketing expenses and resources needs to be optimized to manage costs efficiently. So how do you start on your customer acquisition journey? If you look at the image here shows the lending funnel. You first of all need to acquire the customer. You need to evaluate the potential customer to see that, they are a good fit for your business. And then you need to do compliance, which is KYC. You have to ask for ID, credit score, sometimes guarantor, depending on what lending company it is, and what information that they look out for, before you then disburse the loan. So before how to go on your journey, you basically need to set what your customer acquisition goals are. What are you trying to do? Are you trying to increase your customer base, or are you trying to get, better borrowers, people that have, maybe you borrow a larger amount of money. Maybe you started giving out loans at an average of 50K. You're now looking for, more high ticket loans, people that borrow 500 or people that borrow 5 million. So you can want to increase your customer quality because you found out that you're not really making a lot of money off those small ticket loans. And you might also want to reduce your cost per acquisition. So it's important to decide what your goals are, and then identify your preferred customer avatar. Some people also call it buyer persona, which I had sort of like touched on before. And then you want to choose the channels for your acquisition. I think a lot of businesses, especially fintechs, sometimes want to be on all platforms and test all platforms, but it's not necessarily ideal. I think what's important is to test a channel to see, how well it does, how many customers are you driving from that channel, what's your customer acquisition cost from that channel, what is your conversion rate, and then based off that, and then looking at your return on ad spend, you can decide to stop using some platforms, also depending on how much you have, for marketing. You want to increase the budget that you spend on the successful platforms and reduce or remove, the unsuccessful platforms entirely. Some of the businesses that we looked at in coming up with this insights were Branch and Rent Money, and we found that a lot of them use both organic and paid customer acquisition. Organic being SEO, content marketing, and email, while paid is mostly pay per click, display ads, and promoted and sponsored posts. To improve your customer acquisition and strategy, there are 9 key points for you to note. And starting with mastering the call to action. Most of your work starts on your website or your mobile app, all right? And mastering the call to action, letting people know what to do, sign up, call us, register, is very important. And you can't master a call to action without actually testing or A/B testing, different CTAs to see which one drives the most conversions, which one drives the cheapest CACs. And, that already sort of like speaks to number two, which says you should track everything. Data and analytics is a big part of your work as a marketing leader, or a person in the marketing back office for your online lending company. That's how you know what works, and that's how you remove what isn't working. Like I already said, your user experience is very important. As we go on in this slide, I explain a little more how to ensure that your UX is perfect, because when your user experience is probably not great, your user journey is too long, people are going to bounce off, people are going to get frustrated, people are going to abandon the registration process. And patience is also a very key ingredient. um, 1 month, 2 months, even 6 months of marketing is hardly enough to know, to have like real data to compare what's happening month on month, to retarget people, to basically measure attribution and things like that. So certain times you want to start slow, give it time to see, the kind of traction that you're really getting. And then, of course, diversify. Although this is a tricky one, diversification is really talking about the channels that you are using for your acquisition. And like I had said before, you don't have to be on all channels. Just try and be on the channels that are working and are cost efficient. But when you diversify, if you're really looking to scale, certain companies, their problem is growth. Oh, we already have 5 million users. They're thinking, how do we get 10 million more? At that point, you have to be on, most channels, looking for any and everyone, that wants to borrow money. But if you are, a small company, or you're, focused on a smaller niche of potential customers, if it's one channel that is giving you the high quality customers, then you want to stay on that one channel. I think there was one fintech, I think it was Piggy Vest, right? Sorry about the slides, it's sensor related. Once I move, it'll come on. So next time I'll just wave my hand. Piggy Vest probably, made most of their early traction on Twitter. They had a very good conversational strategy that made the Gen Z audience very connected to them through memes and jokes and stuff like that. And a lot of their customers ended up being organic customers from Twitter. So, you know, they didn't really need to diversify as much. But I think that, at this stage of their journey, they're probably looking to grow, and they probably maxed out, a lot of the platforms that, like Twitter, that gave them most of their early customers. So they'll need to diversify. And then, building engagements. Certain times you generate leads, but they don't turn into customers just yet. You might need to nurture them, with emails, with content, with sometimes free things, discounts, and stuff like that. And I mean, of course, I don't need to tell you to limit your spending. I think one thing that kills most startups is, of course, in fact, most startups die when they run out of cash. And if you spend all your money on marketing, and even if you're acquiring customers, but those customers are not profitable and you're making a loss, you'd eventually run out of cash, and you would be on tech point or tech cabal saying that your online lending company has folded up. So you need to be very careful with your spending, which I'll probably get into a little bit more. Running out of time now, so I'm just going to scroll through my next few slides pretty quickly, and I would answer any questions in the Q&A session. So yeah, I already touched on return on ad spend. It's basically how much you make, from every, from every sale. So basically, it's the amount of revenue generated for every naira spent on advertising and marketing. And this is one of the most important metrics to track. If you want a good ROI on your customer acquisition. When it comes to improving conversions, the most important things are to ensure that you have deep analytics, which I sort of touched on before, that you A/B test things, so that you compare which one is working better. When you have like dormant, or inactive customers, or people that have not converted, you want to nudge them with offers, discounts, and you want to ensure that your UI design is straight to the point, very intuitive, very fast. You have large CTA buttons. Obviously, you want to keep your language simple English. Don't confuse people. And then you want to, support your activities with marketing automation, automated emails, chatbots, and stuff like that. So yeah, I'm going to pass the mic to our guests, to take the presentation from here, so that we do not spend too much time. But at the end of the of this webinar, we're going to ensure that we send a free ebook to everyone on this topic, which is ROI driven customer acquisition. So, if there's anything that we've not been able to touch on, you could definitely get it from the ebook. And of course, you can contact us, if you need further help.
Thank you, Leye. Okay, so I'm just going to be talking and touching points on how to acquire customers and what are the challenges that people go through in customer acquisition. But before you go into that, you must start with talking about what is lending itself and how lending has evolved. Lending has always been around in times of time, from when Adam and Eve were in the garden. They've always been that scenario of you want to take something, you either buy salt from someone and then you exchange it for another thing, or even when they were buying and sharing animal clothes and the rest of that. And over the century, lending has pretty much determined the profitability of certain businesses, where customers are able to either go get revenue that they need as a loan and then be able to expand their lending businesses as well. But there are certain things that have been extremely challenging. You have the trying to get the right customers. You also have having to find the people that are credit worthy and that will repay the loan, which is the main pain for most lenders. It's not all about giving out the loan. Would that money come back? So I'm going to talk about what are the challenges that lenders have passed through in the past and how they probably have handled it, and we'll talk through that. So paying back a loan has been is the most difficult thing, or the pain that every lender goes through. Is either you have customers that are telling you lies, or customers that are giving you false information, customers that are not willing to repay even when they have the capacity to repay, and a whole bunch of that. Or during that session, a customer will lose their job and customer would die. Sometimes customers have also died as well. You will not go and tell them, come back from the dead and then give me back my money. Or you give someone a loan and the person business falls down. There's nothing that you can do about that. So beyond that, we also have instances where government regulations also come into this and then affect businesses for lenders. So what do lenders now do in terms of these challenges? When customers are lying, you see scenarios where lenders are asking for information that they feel would not be falsified, lenders updating their decision model to at least streamline the lies that some people would tell. Also, lenders trying to ensure that the bad customers don't even come in, let alone having to struggle with repayments and collections in the end. Then there's the issue of government. Sometime last year, yes, I know a lot of lenders closed their shop after the whole FCPC registration came up, and a lot of lenders started moving around. First, we're giving you have to do your FCPC registration. You need FCPC to be able to push an application to store. You must be licensed, and the registry. All of those things were very, very strict, which kind of made a couple of lenders to close their shop. However, the regulation of the government is still that is still needed. Then, when you've moved past borrowers stressing you, borrowers lying to you, customers losing their job, or somebody dying, you now have government also putting up their own issues with you in terms of regulations and then license. There is the other part of hackers coming to steal your money, because most lenders are, for them to be able to grow, they have to digitalize their lending processes, which means take everything from using the mundane way of manually underwriting each of these loans to actually like, let me get these customers all around the world digitally. Then you have hackers coming in. And also the other parts of maybe your employees are making your borrowers upset, and which makes them to leave. Oh, I cannot get a loan, and you have one bad customer support person that doesn't even reply to all the emails from customers and all of those. So these are the different challenges that lenders have faced, and that affects them being able to acquire credit-worthy customers. However, there are ways that they can still achieve all of this even with all these challenges. So how do you now acquire good customers? As a lender, it's easy to just jump into, yes, I want to do my lending business. Yes, I want ABC growth. But which customers are you targeting? You have to segment or kind of determine the type of lending that you want to do. Is your lending catering for people that are coming to get like a payday loan? Is your lending going in for SME loan? Are you trying to give like consumer loans? Which segments? You have to segment the lending that you're going to focus on for you to be able to plan towards how you're going to acquire the customers to fit into each of those categories. So for payday, you already know that that's for salary workers. If you're looking for salary workers to take a particular loan product, you're going to, at this point, you're going to be talking to companies. Oh, I want to partner with you and I'll offer loan to your employees at a different at a discounted rate. Oh, I'm giving it at 5%, but I'll give it to your employees at 3%. In that way, you've targeted your customer acquisition to suit the kind of clients that you need for lending. Then you also have the SME loans. If you're looking out to disburse SME loans, um, or also to get like purchases for people that want to get purchases. You're also looking at businesses in this instance. And you won't find business people on social media. They're not the regular people that are using X to banter words. At this point, you're now going to find a different way to target your acquisition towards those particular people. You can be speaking to ex-bankers. Most people, when they do banking, they always start their side hustle, and it usually somehow it's always involved in the finance space, or it's also involves in lending business, anything relating to finance. In addition to that, you have the consumer loans. For this particular set of people, they are the craziest sets you'll see online. These are like everyday people, the people that are looking for like, where can I get urgent 5K? Where can I get urgent 10K? And they are like the bottom of the pyramid, like the bottom of the pyramid. There are a lot. They are the easiest to get, but then again, they are very difficult in terms of repayment because the smaller the amount, the less you will want the KYC involved in onboarding those people to be strict. So you need to know the customers that you want before you can now plan on where to find them. Without knowing the customers, you really would not be able to plan how to find them. Now, why we found the payday lenders, you've been able borrowers, you've been able to get them from maybe like an agent, or maybe you're engaging like company workers and the rest of them. You will now see that for SME loan, you're probably going to be going to the streets because have you ever been in traffic where you're just driving and then someone is trying to stuff one flyer into your front or putting it in your car handle and all of that? That's their own way of marketing for their SME. Those kind of stuff who can also give you, oh, SME people that might be interested in your loans. On the street, you'll find them because they are regularly out there pushing different types of marketing. But for consumer loans, that the ones that are dealing with nano loans, you already know that you want to go digitally. Now, with this point, you've been able to see that I want to acquire customers, but I have to segment which type of customers am I going to target. From segmenting them, I now know how to go about getting these customers. Partnership also comes in play, partnership with different people. Although most businesses don't want to partner, or if you've done a lot of strategy sessions and trying to bring in people to partner with you, especially on LinkedIn, oh, I just met you, chat up. A lot of people have ideas, but execution is a big problem. But if you're able to find people to partner with in order to acquire customers, very good. Partnership is another way for you to acquire good customers. Then beyond that, you run digital ads, but digital ads are so expensive. They are so expensive that if you do not do it right, you end up spending so much money and then not getting a return for it. Um, Facebook and the like, they do like download costs of about like $1, which is like Nigeria now, like 1,500. In this economy, you're paying 1,500, not for the customer per click. Before you look at it, how much are you trying to disburse? You're trying to disburse a 5K loan out of 20 clicks before you find one person that will probably even onboard. And onboarding doesn't even relate to approval of loan or maybe disbursing the loan. So the costs do rack up, and our economy is not even smiling at that. But that's another way that you can actually acquire good customers using Google Ads, any type of Google Ads, Facebook ads, and the rest of them. Instagram ads as well. But when you do the Facebook one, you can it kind of suffices for both ends. Then referral. Referral is the biggest marketing ever. Referral is the one way that you can get good customers acquisition. If your platform can sell itself, from word of mouth, you will be able to tell, the other people will be able to tell someone that will tell someone, and that's just going to be it. However, referral can also be the thing that will make your business or also end it. Because if anyone has like a bad experience while using the product, that's the same way they're just going to go, oh, do not use this product, do not use this product. So you have to be very careful of customers from certain parts of the world. You don't want them to either come in, or you don't want them to either be the one that are referring you, because you don't even want a particular stigma in terms of brand for your company as a lender. Beyond that, I'm now going to talk about the benefits for following or being able to make most of the things that I've experienced, that I've worked in terms of customer acquisition in the past years. A couple of years ago, when we started out building for lenders, we will build this technology, a mobile application, and then you're just dropping it with a lender, and we couldn't experience what exactly these lenders were going through. So if a lender says, "Oh, I am going through XYZ problem," I would say we didn't have like a empathy. We couldn't empathize with what each of these lenders were complaining about. So we decided to create a demo application. It's called Erorin, and we started experimenting with this application. For everything we wanted to give each lender, we were able to experiment on this application. We've not done ads of this on this application before. We just have, oh, we have a new feature that we want to launch. We launch it on this mobile application, and then after that, we're able to push it to the lenders without doing ads, without even having real staff beyond maybe I have an intern that is helping to reply on support and a whole bunch of it. We've been able to get more than 500,000 customers, which is more than some new banks and other people have right now in Nigeria. So more than 500 customers without ads. So there are some things that we did right that made it work out for us. And those are the kind of things that we do advise lenders to take heed of or follow through. Um, let's start with what are those things that these lenders can do. Over the years, yes, I've worked at like more than 100 lenders, and everybody, when they want to go live with their application, you're calling, oh, I'm going to call this marketing agency. They're going to do this, that, have all the big plans. And the first thing I say to them is that the first and important thing when you're launching your app is try to get the organic users at first. And after you've gotten the organic users at first, you can now plan on how you want to do ads. But even at that, there are certain things that are consistent that will help you get the customers that you need without you breaking the bank. We have good customer service. I cannot emphasize on good customer service. You see, when a customer chats you up and they are guaranteed that someone on the other end would reply them, even if it's going to take like 1 hour, just knowing that somebody from this company, when I chat them, is going to reply them, will always mean that, oh, please use this application. They have people that is to respond to messages. If you have any issue, there are people who chat to you. If you have any issue, there are people that would actually even call you. Good customer services is very, very directly related to growth. If you want to grow, you need good customer services. All the lenders that have like poor customer services, they can hardly grow, especially at the point of when you've kicked up, when you want to start. Eventually, if you start off with like a poor customer support, down the line you can't pick up eventually. But starting out with having that good customer service cannot, it's a do or die. We also have good and smooth process. You want your process to be as simple, straightforward as possible, especially if you have segmented your customers. If you're dealing with the SME customers, you already know that you're going to be asking them for a whole lot. I mean, at this point, when the borrowers of those particular categories are trying to apply for a loan, you're looking at, oh, what details do you need from them that they can provide for their loan approval, for their loan request to even come in. Then you can now spend more time and underwrite that loan and maybe ask them for additional details. If you're looking at the nano loan users, you don't need too much. The tier 1 KYC, which is BVN, their selfie, their means of ID, all of those things are key. Once you have those things, find a way to automate it and pretty much be able to underwrite the loan faster. A bunch of people will say, I need like address and all of that. I feel asking for address is very stupid. I don't know, but it is to me. Because if you're trying to disburse nano loan, and you're trying to acquire like multiple users and then you're getting their addresses, you will never ever visit their houses. You have more than 500,000 customers. Where are you going to get the finance to be able to go to 500,000 houses? So for people that ask for addresses for nano loan, I just see that I think it's not needed. From my experience, it is not needed. It doesn't help to improve the NPL. It doesn't help to improve the credit worthiness of each of those customers in any way. Then you also have slow disbursements. You want to make your automate as much as possible. If you can automate certain areas of your disbursement, that's fine. Makes it better. The more you automate, the better and faster loans will be able to be processed, which means that more people would come in. If for every time a user applies for a loan, it takes about 24 hours before they even get any feedback from anyone, that would also mean that nobody's going to be coming back again. Beyond that, is also communicate like crazy. There is no harm in communicating. The worst the borrower can do is ask you to remove their name from their or unsubscribe from your email list and the rest of them. Send communication emails, send text messages, reach out to your customers. Even if you're not reaching out to your customers on your social media, you keep pushing and pushing and pushing. Now, we also have, if you have an application like most lenders that are doing these days, you have in-app application that costs you 0 naira. The in-app notifications are going out. When Grace sees that, oh, this app, they are always giving me updates on ABC, I'm likely to call another friend to come in and say, I want to try this app. So again, these are some of the things that we've tried over the past, and these are the things that have worked in being able to acquire some of the customers that have been around. So that's all I have for you. I just hope that people are able to get something out of this session. Um, yes, thank you so much. I was so sure that I was able to keep the time. Over to you, Leye. Hi, Leye.
Hi, hi, Grace. Thank you so much. I think I really enjoyed your session, and I'm sure like the people in the audience enjoyed the session as well. Some very very practical recommendations and advice. At this point, we're entering into the interactive session where we get to ask each other questions. So, I'd like to know a little bit more about LendSquare and, just some of the insights that you shared about, online lending companies. What does LendSquare, what problem do you really solve for online lending companies? I think that's my first question. And, what challenges, what are the main challenges that online lending companies face?
Okay, I would say we're helping lenders manage their technology, let them take the stress off them while they can focus on the business aspect of it. So if you are, for instance, now you want to start a lending company, you want to put together the technology that you need for your lending company. First of all, you need integration to maybe get your own core banking application. You do integration to payment providers. You do integration to the three credit bureaus. You do integration for data as well. All of those things come at a cost. It's expensive. There is no cheap technology out there. And beyond that, you also have to manage how you're going to be communicating with each of those people, downtime, uptime, or this server is down. You won't even be thinking about using just one provider because, well, you need to have multiple. Someone that is trying to start that has 10 million, if they've gone to spend over more than 7 million naira to just get their technology intact, they're only left with 3 million naira to disburse. So that is where LendSquare comes in. If you're looking to start and you want to scale, you can start with LendSquare and then scale up. So we have like a free web application that you on board, you set up your account. In less than 5 minutes, you're already disbursing loan. And the money that you have to disburse, the 10 million naira that you have to disburse, can actually be used to disburse as again, you spend the 7 million naira first to get the technology. Then if you want to now expand, that's when you will now have to provide like you will now have to pretty much spend more money to be able to expand. But that's where LensSquare come. We are pretty much just bridging the gap in terms of technology. Provide the software, provide the technology, lenders can use the platform. Either you use the already made, you use the web app, or you, if you're the fancy lender that wants like a mobile application, we've got you. We build the mobile application for you that is running on our infrastructure, and then you're able to scale with it. Yes. So what are the challenges most lenders have pretty much gone through? It to be defining the right customers. It's very difficult to know whether you're actually reaching out to the right customers. How do you define the right customers that you want, which is what I spoke to about? How do they even target? So most times when I'm having conversations with lenders that come up and say, oh, I want to start this, the first thing I ask is, okay, what type of loans are you trying to disperse? Because if I ask what customers are you looking out for, most times,
They
oftentimes they
wouldn't
do
know
not.
the answer.
Exactly. So what loan
Mhm.
product do you want? Oh, I want to give out 10 million to 20 million. I'm like, that means you're looking at either the salary workers or you're looking at SME. You are not going to be giving 10 million naira to nano loans. That's
Yeah.
just going to be them. Then after we've done that, we'll now start talking about the cost of acquisition. Yes, you've defined it. What is it going to cost you to acquire this set of people? What type of marketing do you need? Is it just a technology you need, or what type of technology do you need? If you're reaching out to SME kind of categories of customers, you do not even need to get a mobile application. You just need a web app to automate all of it. Oftentimes, when people are like, I want to give out loans, they just go, let me get my mobile app. I'm like, hold on, who are you trying to reach? Or what type of product are you trying to reach out, give out them? Then from there, we can now say, okay, go with the mobile application if you're doing nano loans. That is the fastest way to get them. Once the app is on store, once you're ensuring that your ratings are high, all of those things will just click without you doing any advertising. The referrals will come to you naturally. However, if you're going to be giving out loans to SME people, you have no business with mobile application except you have extra money to spend. Then you can now say mobile application, or maybe after you've acquired a certain number of people, because the businessmen will not be picking up their mobile app to apply for a loan, especially if they're submitting stuff like CAC documents, they're submitting their bank statement. They'll rather just do it on a computer, and then they're working class as well. Then you now talk about the quality of the customers. What are you using to be able to get the quality of the customers that you want? How do you filter out the kind of people that you do not want on your platform? It's easier to stop the bad borrowers from coming than trying to chase them for repayments, right? So that's another challenge then. So what decision model do you have in place to filter out the people that you do not want? What checks do you have in place again? Do you want to partner to feed up data? Data as well that helps in all of those scenarios. And then after you finish talking about the quality of people that you want to get on the platform, you now talk about the cost of retaining them. Cost of retention is actually cheaper than getting customers, in my
Yeah.
own opinion. All you have to do is, when you're doing the right communication, if you're able to satisfy the customer's need, why would they leave you? If I came for 5,000 naira loan the first time, by the time I came back, oh, you're telling me I can get a 10,000 naira loan. By the time I'm coming back, you're telling me I can get a 15,000 naira loan. I'll keep coming back. I won't go to try another place that I will have to start building my credit score. It will be easier for me to just continue getting a loan from you. So yes, those are some of the challenges and possible solutions to them.
Yeah, you mentioned something while you were speaking about I don't know if it was one of your clients or LendSquare itself being able to acquire 500,000 customers organically. Can you tell me a little bit more about that? Because obviously, we're talking about ROI, and if you're able to keep your costs low, it will go a long way to ensuring that you have better ROI. So, can you tell us a little bit more about how um, the company was able to do that?
So it's a demo application that we have, and that's where we test certain things. It was just supposed to be on store so that if customers come in and they say, I want a mobile app, I have something to show to them while talking to them that this is what you can get. Then over time, after we launched the application, we noticed that people were trying to reach out to us, and we're like, we're not trying to sell anything here. We just need this app to keep running so that anytime a customer comes, we have a reference point, almost like a POC. We have something to show. But we're like, okay, let's just train an intern in there to just be replying to these people and let's see what happened. So a customer drop 1 star on store, you're going there to go and address it. And then you're also trying to get, who is this person that dropped a 1 star? how do I solve the problem? After the person has dropped that 1 star and you've gone to find them and solve their problem, the customer will now go back, oh, my problem has been solved. Thank you. With all of those little things, paying attention to the support, paying attention to the issues that are coming in from the customers, and just being focused on just the customers, we noticed that a couple of people were just doing the referral for us. They will go, oh, I used this app, and they were replying me. Even when I went to abuse them on store, they still found me and they came to tell me that, oh, I should do this. And I was able to complete my onboarding. I was able to complete my loan application. Those little things just help. The quality of support was what got us to where we're. So once the quality of support is high, on store, you'll be ranking high. The minute that quality is not there, it drops. So once you're ranking high on store, any other person that even picks up their mobile app and then says loan app, you pop out among the first 10. Obviously, you're going to be downloaded. And then that was how we won the game, just like that. And it now became an application that we couldn't even risk too much of putting too much of test, because it became too successful that we were like, what just happened?
Let's leave it at,
And
let's leave it the way it is.
yes, it was just supposed to be a demo application. So we just left it there, and the application is still running, and we just have like a customer care that is constantly just engaging the customers, and it's just giving out the nano loans, and then we use it as a reference point for data as well. And yeah, that's it.
Fantastic. I think that's very insightful. Basically, good customer service would basically lead to word of mouth referrals from customer to customer, which will then lead to basically app store optimization for you for your lending business. So that's like a chain reaction, you know. So just
Absolutely.
respond on time, respond nicely, and people abuse you, say God bless you, and then that'll lead to people saying, ah, these guys are good, and then the app store will then say, yes, these guys are getting good ratings, and then that'll keep you ranking. So definitely something new to learn in terms of organic customer acquisition. So yeah, those are all questions from me. Do you have any questions from your end
Oh
on
yes, I
customer
did
acquisition?
take note of one. So now in this kind of
Okay.
economic time, like how would you advise a lender to like adjust their marketing strategy to keep like the acquisition cost under control while they're still attracting like quality customers?
Oh yeah, I think that they should look at more long-term and organic acquisition strategies. So, for example, like you mentioned, if you're focused on SMEs, just look at web-based app. So, instead of spending maybe 60% of your marketing budget on paid ads, probably spend it on search engine optimization, where businesses are finding you organically when they go on Google search, rather than you paying for every single click that you get, and then a lot of those clicks not turning into customers. You also mentioned partnerships at some point, although you said a lot of companies don't want to partner. I wonder why, but certain times you can tap into a partner's audience as long as it's mutually beneficial, I believe, right? You can tap into, an audience's customers. So, for example, some people do some buy now, pay later, programs. Maybe it could be electronics, for example. The electronics companies have loyal customers that they've already profiled, that they know, that they work in structured companies, so they could give some special offers, to that company, and then basically tap into a new um, data set of customers entirely without, having to spend that money on paid ads or other things like that. So I think partnerships, is definitely a big part as well. And then referrals. So, like I mentioned, if you find that you are spending 10,000 naira to acquire a customer, with a referral, the one that you mentioned was sort of organic. You're not begging them, you're not saying anything, just being nice to them, just responding to them nicely. they refer, but sometimes you can incentivize a referral, by saying, oh, maybe when you give a loan, you charge processing fee. Your next loan is processing, there'll be no processing fee, or, get some cash back, maybe 5K, if you refer, for every friend that you refer. So if you spend 5K rather than 10, you've been able to save five. And that way, you'll be able to get two customers for the price of one. So I think to summarize, long-term customer acquisition strategies that are more organic, like search engine optimization, content marketing, creating content would definitely improve your customer acquisition and make it cheaper. Partnerships, tapping into other people's audiences. But, very important to know that the partner that you're tapping into their audience basically has your type of audience, which goes back to, what you said about being able to understand who your buyer personas, your customer avatars are. Because if you're working with a partner that's, their customers can't afford your loans, or, they don't even have the requisites to meet your KYC, then that partnership will not work. So I think that those are that good ways to acquire customers in a tough economy like the one that we're currently going through.
Okay, thank you very much. Even to add to that, it's not just the yes, the customer acquisition worked when we did the whole support and focus, but we did try a lot of things that never worked. We did try the whole bunch. We didn't even know certain things did work. I'm just speaking to you mentioned about the promotions. I don't know how those promotions were done, but there were some promotions that brought in some customers even when you were doing referrals. But then again, after that, they are gone. The minute you stop the referral, you will not see any of them again. But they just
Mm.
come and go and the rest of it. But those were the key things that we did that worked. And we're like, oh, wow, we'll just keep telling lenders this is what works. It's not left for them to take it. Yeah. Thank you so much, Leye.
Awesome. Thank you so much, Grace. So we want to check if there are any questions from the audience. So let me just check with my moderator to see if there are any questions. If there are any
Okay.
questions, if you're listening, please drop your questions in the comment section, and we'll see it as a banner. But in the meantime, let me put back up my presentation to talk about a few
Okay.
other things. 1 second. So, while we're waiting for your questions, um, I wanted to just touch on a few things that I didn't complete. We'll just wrap up in the next 10 minutes. Right. So, there were a few tips that, we put in this presentation around UI UX. So, some best practices for a good customer experience are to pre-populate fields where you can, so to just help speed up the process. When you have forms, you can show, if they say, oh, how much do you earn? You can already show, or between 10,000 and 100,000, between 100,000 and 1 million. So that way the person is just clicking and choosing, rather than, having to crack their head to think about what next to fill. Also, buttons and form fields should be bigger than other fields, especially when, people are using your platform from their phone. It makes it more user friendly. It also says minimize typing by using checkboxes, drop downs, and auto selected answers. So that way, that person can just breeze through that whole process of sharing their information. Keep your questions clear and concise, and provide tool tips for complicated questions. So there's some questions that will just leave a potential customer scratching their head, like, what does this mean? So that's where you put that question mark, that if they click on it, they can see, an explanation of what they're looking for, what you're looking for from them. And then when it comes to the customer journey, it's important to evaluate that. If the journey time is too long, the stores will get frustrated and drop off. So prompts for sensitive questions upfront, will lead to a potential leakage. So you're asking for card details, you're asking for, just serious information. You want to, you know, let them get committed, give you their name, their email, so that if they actually drop off, you can contact them later. Um, you know, Certain times customers might be new and have no credit history. So certain times you don't want to go into that first. You want that to come much later. Information architecture that allows for minimal effort from visitors is very pivotal to fewer drop-offs. And lastly, it's important to include pre-populated fields like employment type, purpose of loan, location in the first few steps of the application. And then when it comes to KYC, you know, it's a 50-50% chance that people will drop off at that point. But because borrowers are already invested in the process, um, abandonment happens because of multiple touch points or lengthy application forms or complicated compliance procedures. So just keep it simple. Keep it as simple as possible. As long as you've been able to get the customer information, your onboarding team might be able to reach out, depending on, obviously the size of the customer. Some are not worth it, like those nano loans, like you mentioned. You probably want a lot of that to be fully automated. Um, Other things really just talked about best practices, automated data capture, easy to understand language, and chatbots can also help as well. If you have chatbots, it could help lenders save up to 30% in customer support costs. Having to contact a customer service representative, can just be long. Like, I'm not trying to contact anybody. Let me go to another place. But if you have a chatbot that can answer some FAQs, that is automated, one that would save you money, hiring more and more customer service people for easy questions that could be answered. And it will also help you be able to scale. If you have 100 people on your website at the same time, your chatbot is able to answer a lot of those questions. And I had already touched on nudges. If you have like inactive people in your user journey, in your acquisition funnel, you can nudge them, with some automation, some messages, some emails, A/B testing, and of course, analytics. I think we're looking at some, strategies for lead generation. I think we looked at Fair Money and how they use influencer marketing. I think that's, still at the top of the funnel, just trying to get people to be aware of you on digital platforms, on social. There's so much going on there that if you don't use content that is attention grabbing, people are not even going to stop scrolling to look at what you're doing. So, influencer marketing using a known face, usually helps. And for people on the call that want to learn more about digital, that want to learn more about marketing, customer acquisition, Intense Digital is currently delivering a course in partnership with Digital Marketing Institute of Ireland for a certification in a professional certification in digital marketing, where we will teach you for 5 weeks or 5 weekends on some of the concepts that we've discussed here. And at the end of that process, you would basically do an exam, and if you pass, you'll get a certification that would help you, first of all in your career, or if you want to get a different job. But at the end of the day, what's really important is the knowledge that you learn that will help you actually practice some of these things that we said on this call. Um, Yeah, the course is currently going for a discounted rate of 450,000. And if you want to sign up, the URL is right here on the screen, intenseng/training hyphen form. Um, and if you also go to our website, intense.ng, you see it there, the menu, Digital Marketing Institute. All you have to do is register and somebody will contact you. Right. So we promised that everybody that attended this webinar will get an ebook, which is exclusive to only attendees of this webinar. The ebook actually really goes in depth into everything that you need to do to ensure that your marketing activities give you a good return on your investment, that you're getting a healthy return on your ad spend, and also touches on other organic strategies that you can employ where you don't have to spend so much money. It could just be some content marketing, some partnerships, some referrals, but it shows some case studies as well, stuff that lending companies have done where they were successful. And we hope that you really find it very useful and, you'll be able to like refer to it from time to time, in your marketing strategies. But of course, if you need any help, you can always reach out to us. And if you're just trying to start up your online lending company and you're thinking about or are looking for developers to build that app, you know that you can reach out to Grace and they'll hook you up. Grace, what does it cost to use Lender?
Oh, you can start off for free. However, it's based on the specification that you need. So if you're looking to put a whole bunch of stuff, the price, what you want determines the price. There's some people that want to maybe integrate a core banking application, make it customized, white label, anyone. So it's a whole bunch. So depending on the features and the capabilities you want the app to do, that's when the pricing comes in.
Okay.
Yes.
So basically
So
you're
the
saying
start off is for free, 0 naira. You can start
okay.
up using the platform.
So you're saying come one, come all. Um,
Yes.
so you're not turning anybody back. I
No,
think there's some
no.
questions. I think there's some questions. Yeah, can you post the questions through the banner so that we can answer them? Thank you. Okay, it says, are there any conservative approach to filter leads? At some point, your targeting might bring in tons of leads, and there'll be a need to have a filtering system. Is there a cost-effective approach? Well, I think that's one, when you look at something called lead scoring. Grace and I have sort of like touched on this. It's important to know who your ideal customer is, right? So, lead scoring is basically a method of knowing what leads are good and what leads are not. So, let's assume that the score for the best lead is 10 and the score for the worst lead is 0. So, if I'm looking for people that are trying to borrow 10 million and above, right? First of all, they need to indicate that they want 10 million and above. If they indicate that, then maybe that person scores 3, right? If the person has all the KYC documents, maybe it's another 3 points. If the person has borrowed from you before, maybe that's another 3 points. So, obviously, a lot of companies would use like a CRM or a marketing automation tool that has, lead scoring as one of the features, so that as your leads are coming in, there are rules, right, to check these criteria and score those leads, which will then, automatically segment. Okay, any lead that is 6 and above, segment them to, these are the people that are ideal customers, and any lead that is, 5 and below is just okay. Let us keep these people in another segment. Let's nurture them. Let's see if things change, with time. So you can actually do lead scoring manually. You can download all of those leads, and somebody in the sales team can actually fill them into some kind of Excel or a Google sheet and score them. and you can sort them. But obviously, it's always better to use technology to do that so that it's automatically segmented. Grace, is this something that LendSquare does?
Yeah, we for us in this instance, I'm talking about relating to our clients because the borrowers are not our clients, the lenders are our clients. When we are trying to get customers, we have certain things that we use to filter out the leads. We just ask questions in at the first glance. Um, Basically, because most people think they are ready to venture into a business, but by the time you start asking them set ABC questions, you realize that they probably don't have what it takes to be a lender. I've had more scenarios with aspiring lenders than actual lenders. That's a Grace that has like money to disburse and then coming in and say, "Oh, I'm ready to start up a business. I want to give women, I want to give loans to only maybe women and the rest of them." Just something of that aspect. And by the time you're having conversations about, we start asking the hard question: What do you have in place? What customer support system do you have? How are you opening to start? Are you aware of what it takes when it comes to like NPL? When you start asking all those questions, that's when you see that you're able to filter out some of the people that are actually ready and can turn out to be a lead from those that are just maybe about to waste your time, for the lack of a better word. So yes, that's it from my own end.
Yeah, just to add to what you said as well, there are marketing qualified leads and there are sales qualified leads. So, there are some leads that will come in from like your just like your contact us page, or that will have filled your form. You want to qualify those ones and see, certain leads is just not ready. So you're just going to like put them back into, the system to just continue nurturing them over time, put them in the database. And then sales qualified leads are just like ready, the ones that you can actually sell to, right now. So, it's just another concept that I thought that you should know. Somebody's asking for your website address.
Okay. In the comment section, I've dropped it so
Yes.
that it can be shared with them.
Okay.
That would be like lendsquare.com, lendsqr.com.
That's lendsqr.com. I saw a comment flash now. Okay, it says you spoke about getting organic customers first. In an organization where results are demanded from day one, what timeline do you think? What timeline do you think they were able to achieve that? Do you want to go first?
Um, so there are scenarios when they want results from day one, and it's not possible if you don't start with the organic customers. So take for instance now, say I'm launching an application today and today is my go live, and today my marketing team is also starting and they're pushing marketing. I will now be getting 1,000 downloads per day, and maybe 50% of the 1,000 would eventually convert and complete the onboarding. At this point, I am saying, oh, I get 1,000 downloads daily, but then marketing stops, and then you're struggling to know what your organic customers are. The reason why we start with organic customers is so that you can measure growth and success. You need something to benchmark. Am I going up? Am I going forward? Or am I going backwards? If I started today and I said I just have like 10 users that are downloading, and by the time I do my marketing, I'm getting 1,000, I'll be able to say, yes, my marketing has worked. But without the benchmark of the organic, you can't even tell if that marketing has worked. Even the 1,000 that you're seeing from day one after you've started with the marketing, you're not even sure if it was the ads that you put or they are your organic customers. So you don't even have what to measure. Should I continue? Should I stop? So from day one, you have to tell them is there's no day one customers. The only day one customers that you have would be when you're launching, you put together a team and then you just push the application to them. Oh, I have a set of friends that are always chatting me and sharing memes on Instagram. Put all of them in one group. I have launched an app. Guys, come and support my app. I have one WhatsApp that they're always sending me ABC. Put them all together. Guys, support my app. You've already gotten your demand from day one, and then you now have something to compare as the time goes. So yes, that's my feedback from it.
Definitely very good advice. I think in an organization where they demand results from day one, you probably also need to speak to your bosses and educate them a bit. Of course, if you demand results from day one, organic, acquisition definitely takes time. So I feel like you're going to have to adopt a hybrid at that point. Some paid acquisition, and then as you're setting up your different organic channels. However, to add to what you said, when you're building a product or when you're about to start, you want to start with like your immediate circles, your family, your friends, certain groups that you're in, organizations. When it comes to building products, it usually says that you want to look for people that have the problem that you're trying to solve, and they'll be very happy to test your products, give you feedback. So that's definitely like the first set of customers that you should reach out to. And you probably had people on your wait list before you launched, and all of these people. And then you definitely ask those people if they really liked your product, if they enjoyed the services that you provided. Then you can definitely use the referral strategy at that point. Like, okay, you know can you refer two or three of your friends that also want to borrow money, and that that have the ability to borrow based on the criteria that we're asking for. I think is a good way to start from day one. So yes, hopefully that answers your question. Okay, I think that we've done almost 1.5 hours. I'm just going to, run through just the last few slides that I have here. I think I've touched on almost everything. And yes, the ebook will be sent to everyone. If not today, then on Monday. Right. Again, about Intense Digital, we are a growth marketing agency that uses data to ensure that your company is able to grow in terms of customer acquisition, in terms of revenue, in terms of return on ad spend. And we use several methods to do this. Some of them you've heard on this call: content marketing, performance marketing. We also have a sister company, which is a creative agency that will ensure that you have the right strategy, the right communication, the right ads, the right videos, the right banner ads, the right blog content to ensure that you're performing well. And our main focus is that you grow and that we make commercial impact. We really care about Naira and Kobo, and we're proud to say that we're one of the only Nigerian agencies that care about what you get, your return on investment, rather than just saying, oh, 9,000 impressions, 5,000 website visits, and then I'll say bye bye. If you're really looking for return on investment, you're looking for customer acquisition, you're looking for retention, then you can reach out to us. We have office in Lagos and London, and you can find us on the URLs on the screen: intense.ng and intensegroup.co.uk. So that will be all for today. Thank you very much for everyone who joined, and hopefully we have more and more interesting webinars like this, and hopefully Grace will come back soon and tell us some new insights, because I thoroughly enjoyed the insights that I got from you today. Thank you very much once again, Grace, and
Thank you,
we look
Leye.
forward to you joining us again soon.
Thank you, Leye. Thank you for having me. And thank you, everybody, for joining. Enjoy the rest of your day. Oh, enjoy your weekend.
Enjoy your weekend. No BAT, no bats.
Yeah.
All right then. Bye everyone.
Bye.